Let's just start with introductions. So let's start with you, Tobias, and then we'll work down the line so that then everybody knows who everybody is here. Tobias.
Okay, thank you very much. Good morning, nice to be here. My name is Tobias Kastner. I'm the head of the research department at Garbe Industrial Real Estate. Garbe is a fully integrated logistics platform. Many people know us from the German market, but we have opened offices in Eastern Europe as well as in the Western Europe. This year, Paris, Milan. So we are covering all of Europe.
Perfect. Otis.
Hi guys, my name's Otis Spencer. I'm from P3 Logistics, Logistics Parks. I'm the Chief Investment Officer. P3 is a privately held owner-operator of logistics assets across Europe. We're active in 11 countries, a portfolio of about 6.3 million square meters, and a land bank of 1.2 million square meters. We're focused on growing our platform further through development as well as through acquisitions.
Super. Ramon.
Good morning. I represent CTP, and CTP is a Dutch-based company. We are on the Amsterdam Stock Exchange. CTP have a portfolio of around 7 million square meters of lettable area, mostly in the region of Central Europe. 7 million and 1 million under construction, and a land bank of around 14 million. So we could double the size of the portfolio, and it's also the plan. And the mid-long-term plan is to hit 10 million by 2023.
Okay, great. Patrick.
Thank you very much. Thanks for having us. Good to be back here. So my name is Patrick Frank. I represent GLP, Germany. GLP is a developer and asset manager as well as an investor for real estate, for infrastructure, as well as for robotics. And we mainly focus on strategic locations, just we want to be where the customer wants us to be, and have a massive focus, of course, on very stabilized countries, Germany, Benelux, all over the place. So in total, we are active in 12 countries in Europe.
Great.
Hey everybody, my name is Ingo Schneewes. I'm managing partner of the joint venture of Beos Logistic, and our partner is Swiss Life Asset Managers.
Super. And where are you active, Ingo, in terms of the geography?
At the moment, at the most attractive market, it's by far the German market. If you look at the takeovers or the take-up numbers, Germany is by far the biggest market. And lean and eager as we are concentrating on German markets at the moment.
Perfect. So we've got a real mixture here of both European, but also, given that we're based here in Germany, that we've also got some German expertise as well. So lots of expertise on the panel here. If you've got questions, do feel free to ask them. I know there's a big crowd here, so do feel free to put your hand up or shout out, whichever helps you get that question across. And if anybody at the back is not able to hear, just let me know and we'll see what we can do about that. Thanks also for joining us on the live stream. I know there's a number of you there as well. Again, if you've got questions, there's a button on the right-hand side of your screen where you can either put it in the comment or the Q&A section, and I'll try and pick up those questions and share those as well with the audience here. So great to have lots of people here and lots of people online as well. Tobias, just starting with you. I mean, logistics was already, a huge growth asset class pre-pandemic. What's your sense of it now as we come through the pandemic and the other side? Is it kind of the out-and-out winner, or do you think residential will be claiming that title? How do you see the outlook at the moment for residential, for logistics? Sorry.
Oh, okay, for the residential. Well, I think I could say some three sentences about residential as well, but I think it's not the audience for residential. So I think, as you said earlier, logistics was already on the driving asset class in the last years. You can track it down, I think, to 2010, maybe early, and then yield compression, the rental development started in 2015. The development soared, the take-up soared, so the pandemic was just another trigger in our sense, and of course we are you can't say winning party because, but everything's connected to it is just getting into our business. So we have much more interest from our investors. We have much, even our tenants say, oh, we have to our rental contracts get longer. They want to rent longer. So everyone sees, okay, the gap between what's completed and what's take up, it's getting narrower. So the pressure is getting higher and higher, and we see no end for the development. Of course, yield depression pricing is a big issue. We have to keep this in mind, and that's because we looking into other markets as well.
Okay, good. And it'd be interesting to get just from you, Otis, in terms of, obviously a huge growth in e-commerce, because e-commerce became the way that everybody could really buy anything. But are you seeing that as something that will be sustained going forward, or do you think there'll be a drop back in that? What's your sense of that?
No, I think what we're seeing right now is that we are still in, I use a baseball analogy, we're still in the early innings of e-commerce. If you compare e-commerce penetration in Europe relative to the US and the UK, it's still got a long runway to go. So we are quite optimistic. If you look at P3's portfolio, our largest segment right now is actually retailers and how they are then trying to capitalize on the e-commerce theme. So we're going to keep growing in that area a lot.
Okay, so retailers, that's an interesting...
Retailers, yeah, because if you take our metro into account, that is our biggest tenant.
Okay, good. And Ramon, obviously CTP, growing at the moment. What are you seeing, I suppose, as the key drivers for you when you're looking at some of these new markets? Are you seeing a growth in demand across the markets? What's your strategy from that point of view?
Yeah, correct. We see demand throughout the region, and both e-commerce related, or growth comes from e-commerce, but also nearshoring and manufacturing. And then because people don't want to wait for goods to arrive from Asia, if they do on time and they learn their lessons. But also we see that some of our clients are building stock to have some extra parts in their warehouse. So we see growth throughout the region. But when we speak about Central Europe, and this is a comparison, there is a shortage. So I ended up in the Czech Republic 25 years ago, and I couldn't find a building which I needed for my low-cost manufacturing. So I ended up in a chicken farm, and there is still a shortage. If you look at, there's a few people here from Bucharest, and that is shortage. And there's only 5 million square meter stock on an 18 million population. If you compare with Holland, 18 million, 38 million square meter of stock. So obviously it's not apple to apple, but there is shortage of space in the region overall, but for sure in Central Europe. So therefore we see strong demand, and this is why we can grow with 15% per year. So yeah, this is a very healthy and exciting time to be in this industry.
Thanks, Ramon. And Patrick, I mean, from your point of view, how do you see that sort of e-commerce growth? Because often people were saying that Germany would be behind that and actually would stay behind it because there was less interest in e-commerce generally in Germany. But what's your thought now?
Yeah, that has clearly changed. And of course, the pandemic has accelerated just simply the demand for package deliveries right in front of your house door. And we feel that one of the consequences is just the fact that we see the major service provider for e-commerce are expanding dramatically in Germany. So reportedly, I heard a rumor that one of the big providers currently have 50 projects which they are currently investigating on. So there is I would say for the time being, almost an unlimited demand. The demand for space, and that currently what we see is that translates into super high occupancy rates, regardless what markets we are in. Looking at markets such as Munich, Hamburg, the really big 5 established markets, we almost see occupancy rates of almost 100%. Yeah, and when talking about 100%, it's really like it's not the shiny Class A shed. It also covers Class B, Class C sheds. So that always is, for us, a clear evidence that we just need more space, more land, and just more expansion.
And Ingo, just coming to you, I mean, I noticed, for example, that Amazon.pl launched in Poland, and I'm assuming quite a lot of that supply lines will come through from Germany. So are you seeing a boost in general also from not just within Germany, but also from e-commerce growing on the borders of the countries around Germany?
Yeah, absolutely. That we are seeing at the moment that The main market, Germany, is the supply and the demand is coming from the outer skirts of countries, for example. For example, Poland is delivering goods in e-commerce to Germany. And we see a lot of companies like Amazon, for example, Zalando, Otto Group, who are looking desperately for land banks. And for us, I think it's the same like for big manufacturing companies. Where are we getting the raw materials that are land banks? And that is the battle we are facing at the moment.
Okay, good. Yeah.
I was going to say, but is that the challenge just in Germany? Because what we see is across all Western Europe, it's getting tougher and tougher to find those locations, and land values are going up. And then plus, with governments taking greenfield out of production, that's just going to drive up the scarcity further. Is that the case in Germany for you?
Absolutely. I think we, as already Patrick mentioned, we are looking not only at the big cities like Berlin, like Stuttgart or Frankfurt or Munich. You need to look at greenfields which are out of these regions. You're looking at something in between Kassel and Frankfurt, for example, to secure sites. And for sure, the property owners are taking advantage of it. If you have a land bank as a municipality, you know where the prices are. They are increasing and increasing and increasing. I think the most of you guys, I think the same with Gabe. If you are in a tender process, you never heard before that 400 or 500 euros per square meters are paid in Germany.
700.
700, and the sky is the limit. I have the feeling for it. And for sure, it fits as well to rental growth. We see 10, 20, 25% in core regions of rental growth. And that makes investors very exciting about the situation we are facing. It is always, the bottleneck is how you get land bank, I think, in most of the European countries.
Yeah, good point. Just to pick up your point, Ingo, on land scarcity again. I trust there will be a lot around the land scarcity in this discussion, because this is the bottleneck we are currently facing, and that is basically the challenge. The biggest thing is really, as you just lined out, basically the scarcity leads to the fact that every doable location in terms of is now becoming a good location. Apart from the fact that really the local concentration of people and the demand drives the location. It's just the opportunity which drives now the location, which is now a little bit further down the road.
So every location in Germany is A, by the way.
No, not everyone. But
of course.
what we call second-tier location, it's getting more and more important. When we see where our tenants are looking for lands, or where we are building developments, it's not always the A cities anymore. It's getting more and more. Does anyone have of Elsdorf or Zeven, Walsrode? I think those are the locations where the tenants are looking now, and where the investors are finding good fitting opportunities, because there are no plots of lands anymore in the real big cities.
Okay, good. And it would be interesting just to pick up on, while we're on that sort of challenges side, I suppose, what are the key challenges? I mean, you mentioned land there. Ramon or Otis, what are the key challenges that you're seeing at the moment? Is it land? Is it pricing? Is it competition in the market?
I think our biggest challenge right now is pricing, because a lot of opportunities are getting priced per perfection. We've seen yields come down, and we have not yet seen that rent growth. So one of the challenges is being patient enough to benefit from the rent growth when it will eventually come, because yields are definitely quite low.
Ramon, what's your take on it?
Yeah. Like any other day in the office, so it's always a challenge to make sure that you actually win that business you want to win, which comes down to lots of creativity and working together. But I think we're pretty good with the market as it is, and I think CTP, with the land bank we have, which, as I said, is 14 million square meters, so we know pretty well what we need to do, and that is build buildings. So we don't have that issue so much of land shortage. I think we've been investing for all those years in land, which now turns out to be quite good. And the land, by the way, I didn't talk about it too much, but if you look at the 7 million square meter of income-producing properties CTP own, more than 50% is only in 10 parks. So if you add the 10 largest parks together, that represents more than 50% of the total lettable. With respect to the land bank, it's the same thing. Most of the land we own is within existing business parks. So it comes with infrastructure, with permits, so we would continue to build buildings in the park. 80% of all we build for existing clients. So no, as a first mover, being there for more than 20 years in the region, which is really growing double GDP compared to Western European markets, yeah. I mean, there is not a boring day in the office, so we're pretty busy with that. So we enjoy very much this market, honestly, yes. And rental growth as well, which is good.
I think it's a massive story. We have CTPs in Czech Republic and in these countries. No? We would love to do the same in North Europe. It's very, very competitive. No? You need to have the right story to the municipalities. No? What are you really bring to the society in respect of which kind of customers we are bringing, no? What kind of developments you are bringing, which kind of ESG you have in place. No? And that is, I think, the advantage is we have the right story to present. No? And yes, we are inviting CTP to come to Germany. Then we might have a tender in this respect. Please do so.
No. CTP stays where they are. But you know, one another challenge, just to round this up, is of course the challenge of our customers. Taking a step back, you know, the challenges they have in terms of the supply chain. We all found out how the impacts, how vulnerable the supply chain actually is, and that is our customers' challenge. The customers' challenge is also to find labor, and I trust we have sort of a responsibility, or we try to position ourselves with and to support our customers finding by supporting them with a high quality warehouse in finding the right resources.
I wanted to I'll pick up on the ESG side again, and also the challenges in terms of locations, which I think is interesting as there's a more of a focus as well on kind of urban e-commerce delivery, last mile delivery. But I wanted to pick up a little bit on the investment capital, the pension funds. Is there no end to the amount of capital that is seeking to be involved in European logistics at the moment? Presumably there was something of a pause whilst people couldn't travel, or was that not seen? In terms of the sort of investor intentions, are you seeing still increased growth in terms of capital targeting logistics in Europe?
Well, as I mentioned, we see that as competition in the pricing out there, and logistics is definitely attracting a lot of the institutional capital that was maybe allocated to hospitality or retail is now coming into logistics. I think there was maybe a bit of a pause, but it was quite limited in 2020. But all that was, that pause gave time for capital to underwrite the logistics opportunity, and they're coming in quite aggressively. And let's say the pandemic, if anything, that was the accelerator for logistics to show how resilient it is, and acted as a magnet for a lot of aspiring developers to get into the business, as well as capital to come in.
Yeah, I agree to that, what Otis just said, and also we've seen that from us doing bonds. We issued green bonds because we call them green bonds. So all the portfolio is BREEAM certified. We'll get to ESG topics later, maybe. But yes, and they were oversubscribed, so we were able to actually raise sufficient funding, which in the meantime is more than 3.5 billion euros, and total cost of funding therefore dropped to below 1.2%. So there is a lot of appetite, which honestly I always believed very much in this asset class, because I see it very simple. Like there's many things you do in the office you could do in your living room. You do the same thing. But if you have an industrial property where you actually need to store goods, or where you actually have a repairment center, or you have light industrial activity, you need a building for. That's really a functional thing, and it's very important for local economies because they create jobs. You do lots of things. So the whole thing of their property makes a lot of sense. Overall makes a lot of sense. So it's also when you talk about reinstatement cost and all of that, because I happen to own, we own a few office buildings, and if I see all of I never knew what rent-free was until I got involved in office developments. And I said, what? You need a building, you pay for it.
Come to Poland.
No, I got it. I learn every day. So yeah, it makes a lot of sense, these industrial buildings. So you get I think it's a good investment overall. So I like the asset class very much. And yeah, as Otis said, it's a safe haven. It's a good thing to invest in. Of course, the building needs to be in the right location and well built and all of that. But yeah, makes sense.
And I mean, is there a sense at the moment, because there's so much weight chasing capital, so much capital chasing the sector, that everybody just goes, well, it's logistics, so it must be great. Do you think there's enough differentiation between people looking at the sector and choosing, just deciding, okay, well, it's logistics, therefore this must be a super A asset? I mean, which is what you were mentioning there, Otis. Is there enough differentiation?
I think,
or are there no bad assets?
No, I think what we are lacking is number one, a clear definition of last mile assets. I've been in the industry for almost 20 years. I have no idea how a last mile logistics assets looks like. So there's no clear definition. It can be a big box, a small box, a cross dock, I don't know. So it's more a description of a location rather than of the assets per se. So that is step number one. So we need to somehow create a common sense when talking about logistics assets per se. Yeah.
I would just add that last mile is just code word for rental growth. So because normally when you're looking at big boxes, there's one profile, but when you talk about last mile, everybody thinks, oh, land scarcity, rental growth. So it's only a positive.
Okay.
Yes, that is absolutely the case. No? I think the fundamentals for logistics are speaking for themselves. No? We have now a generation of millennials who are coming to consumer spending now. I have my kids, for example, if I ask them, hey, go with daddy to the city for shopping, it's quite boring for them, no? Because they're taking the iPad and ordering, no? With Amazon, etc. as well. And that is plus the fundamentals, land scarcity, plus rental growth, that makes investors looking at that sector. I started the business as well, like Patrick, 20 years ago. The investment yields at that time were at 12%. No? That was the business starting with Deutsche Bank in London, who looked at the Prologis system, which has been built up and established in the 19th. And 12% was the investment yield. Now we are at 3%. And I think, from my opinion, we are not at the end of this story. I think we will battle top office yields. If you have maybe a stabilized office building in Frankfurt with a 10 years lease agreement, or you have maybe an Amazon 10 years lease agreement in front of Frankfurt, I'm not sure about the investment yield, who is better.
In Berlin, we're already reaching a 2 before the dot, so we are already on an office.
Yes, I have heard about that.
We did a projection on the yields for the end of the year, and in many sub-markets we are reaching the 3.
Yes.
And or below in all of Europe. So the mean in Europe is, I think, 4.5%
Yes.
initial yield. So it will go into the direction of office. And when we are talking to many people, they say, how sustainable is it, the development? And therefore we did a study with some partners. I brought it with me. Maybe you can download it from our website. Sorry for the promotion part. But it
Okay,
just
okay.
fits the situation, because everyone is saying, how long does it last? We say it will continue because of the reason you mentioned. And of course, many markets are getting pricier and we are reaching yields of the office level. But therefore, we are more looking on the square meter price than the net initial yields and the rent development, because they started to really increase. And we are monitoring, for example, how long does it take to get a 20-cent increase on the rental levels. And I think between 2010 and, 2015, it took so long to get a 20-cent increase, and it's soaring right now. So it just takes less and less quarters for a rent increase, and that's because of the high demand and the low supply.
And looking at, thank you, Tobias, for that. Interesting to get those stats as well. And just looking at the last mile element of this, is that much more difficult in terms of getting permissioning, getting land, because you're having to deal a lot more with the cities within that urban kind of setting?
Because you're competing with other users for that space. Maybe that highest and best use could be residential or something else. So you're competing, And so that's why if you can find a commercially zoned site that may have currently a different use than logistics, you could take a view on acquiring that and look at repurposing that asset in the future when that occupier leaves.
And does that also mean that there's opportunities in what would traditionally have been called light industrial, I suppose, to be able to convert those over?
Definitely. It's all about the location, the access, visibility, etc.
Okay, good. I know that, Ramon, although you've been in the Czech Republic, you're originally Dutch, and that you've just launched in the Netherlands as well. A lot of focus, obviously, in the UK about Brexit, and at the moment we're seeing supply line shortages and different things like that. There was a view at the time that there would be a boost, particularly for Dutch logistics, but actually also for UK logistics in some ways because of the changes in supply lines. Is that something that you're seeing, and is that going to be a driver for growth in the sector, do you think?
I don't think I'm the right guy to answer this question. Maybe others of my colleagues would. But yeah, we obviously believe in the Dutch market, and in terms of the country overall, with 38 million square meters of stock, so that not all of the stock is new. So there's obviously demand for newer buildings, better buildings, consume less energy, smarter buildings, So there's definitely, because of that, there is a market, and the Holland has always been, in terms of logistics, etc., a very interesting location. So yes, we did enter, and we typically enter through acquisition of income producing, or we team up with developers, like forward sale, whatever. That's we did in Amsterdam Harbor, which is, by the way, a typical last mile thing, because as you said about last mile, what is last mile? Well, this is something which is very close to the city center, so you can actually swim from the project to the Rijksmuseum if you wanted to. It's a short swim. So what we're going to do, actually, we're going to ship stuff in with electric boats into the city, because obviously people don't want traffic and trucks and so in the city. So that's the idea. But that's because of your talk about last mile. But to answer your question, yes, we believe in Holland, and we've also bought into a 58-hectare site in Waalwijk. So there's strong demand. And demand, yeah, honestly, I mean, our clients are like 700 of them, and those are mostly multinationals. So if we work with Schenker or DSV or DHL or any other tenant, yeah, they ask us about, do you have space in Holland? Because you are Dutch, or why don't you have space in Holland? So yeah, so that this is part of our expansion plan, Holland, and we may try and get into other countries as well. Yeah, so there's overall good demand.
Okay, and just looking at the demand side from tenants, obviously for the buildings to be sustainable in terms of the investment side, and we will come on to the ESG side shortly, presumably you're now having to look at sites that you're either buying or developing that are going to match the needs of that, which may be, electrification of vehicles, so therefore you're going to need to have much more charging. Are people looking for, because of the tightness of land, are they looking for multi-story? So I suppose, what is it that you're seeing from the demand side that people are wanting in terms of the sites?
I think one of the main topics was already said. Most of our clients say we just need space. It's a driver behind it. Then when there's space, we need labor force. It's not always in place. So we have some tenants moving from Munich to other parts of the country, Erfurt, Leipzig, you name it, or from the central part of Germany to other parts, Magdeburg, for example, because there is still land available for a reasonable price, and there's still workforce. So those are the three criteria right now, which works most often for our clients. So that's why there are certain other patterns of locations are emerging right now.
Okay, good. And do we see there a move towards multi-story like there is in Asia, that kind of thing? Is that something practical for Europe?
Yes, I think so. We are heading in situations that, especially in Germany and also the Netherlands, we are looking at multi-story buildings development. No? In my role as the managing director for GLP, we built up nearby 750,000 square meters of multi-story buildings for one West giant, and I think it's only a question of time when other ones are following in that respect. Just coming back to your question about the Brexit and what kind of demand has that occur for countries like the Netherlands or for Germany. We won a tender with this Life Asset Management, one of the first big deals, 100,000 square meters on a 10 years lease basis. And we introduced 4 different tenants to the municipalities. No? 3 of them were coming from England to settle down in the Duisburg area. No? So it was 4 times oversubscribed. 4 times 100,000 square meters. That is absolutely for everybody who's in this business, that you need to have land banks, you can go speculative. If you erect 1 column, it's already leased. Yesterday I had Rainer Köpke at my stand at Swiss Life Asset Managers. As Patrick said, no, there's 0% vacancy in the regions in Germany and the Netherlands on big boxes. No? And that is absolutely exciting for every investor. Investors have understood that 10 years ago, they saw 4 walls, a facade in the middle of nowhere. They don't understand logistics. But in these days, they know that it is mission critical, no, for any occupier to have that supply chain in place. No? And it's easy to maintain. You have a vacancy rate of 0%, you have retention rate of 100%. What do you need more? Quite easy.
Yeah, coming back to your point when it comes to multi-story, I think you've been talking about more or less multi-story being used by 1 tenant, and that is certainly a different situation compared to a multi-tenant asset being used by various tenants on various stories. So that particular project is sort of still in a, let me call it, a pilot phases in the German market. So it's not a super established product yet, but as Ingo just lined out, it's going to be the future, although it's super expensive to build. But I think the rising rents will just justify that particular asset class.
I would support Patrick's opinion on this matter, because we are building 3-story fulfillment centers, but only used by 1 tenant. And if it comes to renting them on a different with different other, they look for a ground floor access, for example. If you will give them access on the first or the upper floor, there are not much buildings we can monitor with this type. So, and I think maybe someone will correct me on this one, but there are certain examples when the pioneers try to build certain kind of multi-story distribution centers in Germany, but they're still vacant. So 0 vacancy except multi-story.
Yeah, but as we are, if you look at the new business development in Germany, for example, we have achieved with Swiss Life Asset Managers that we are within 10 months under the 5 top developers. How we are winning business? With ESG, for example, plus we are providing multi-story concepts for municipalities. No? They would like to have the uses of the plot to an extreme limit, height and everything else. So we have 4 mezzanines, for example. No? So we are winning business. No? I think the concept needs to be like that, no? Because you have a lack of land. You need to look at this concept. If the occupiers like that with Gabe, I don't think so that they like multi-story buildings like one US giant. But I think that will be the future trend, like in Hong Kong or in Tokyo and elsewhere. No?
Well, I don't want to disagree completely, but I don't think we will have 15-story distribution spaces like in Hong Kong, in Germany. You still have to face that the weight which can support it on other levels is not the same as on the ground floor. You have to have way more pillars within the buildings, so it's a flexibility. Flexibility is much. Not as much as in other distribution centers. And of course, if you ask the municipalities, they will assess, yeah, that's a good thing to go, just build many of them, but they don't have to take the risk. So we are on a waiting phase. We are not against them, totally. No, we don't want to disagree on that one, but we don't see the demand of the market in such a large scale that it's... that's only going to take multi-story distribution to be built.
Only in special locations, no? Like Munich or Hamburg. No?
But in Hamburg, there is an example of a multi-story building which has problems to be let.
Yeah, but it's only a question of time it will be let. No? Because
We'll
the demand is so big.
revisit that in 2 years' time and see where we are on that topic. There's only around 12 minutes left, and I promised to come back a little bit on ESG. So I just wanted to pick that up in terms of CO2. Obviously, a large focus at the moment in the market across all sectors. But what's the position with logistics? What's being looked at in terms of, I guess, also the construction phase for new development, given the focus on embedded carbon, but also on operational carbon usage?
Yeah, I think this is obviously very important. And for us, for CTP, we are carbon footprint neutral in terms of the operations we do, and even more than that. We have the entire portfolio BREEAM certified. What we do at CTP as well is we grow forests as much as we build buildings. So if we would have a 7 million square meter portfolio lettable, then we would have 7 million square meter of forest which we grow, and we plant trees and we maintain these forests, and we do. There's a long story of how to build forests, but that's what we do. So we're very serious about that. It's also because of the tenants, and also I think as an investor and developer who, like CTP thinks, will be part of the community for many decades to come. You obviously take certain responsibilities towards communities and places where you invest. And you want to be an example and a good neighbor when it comes to ESG as well. So, but also for tenants, because I get tenants from who ask me, what is the total cost of occupancy? Where does the energy come from? So yes, we have launched a renewable energy program with solar plants on rooftops years ago, which became a big success, and we continue doing that. But we are also 50-50 male-female in the company, so we're serious about these things to be a nice company for our clients, but also for the people we work with, our employees, for the talents we have on board and the talents we like to grow. So, I think it's, for me, I mean, it's just like doing your best and build a good company and being a good neighbor. But it's nice to see that there is more attention for that now and more, I think this is where we are in life with, it's good.
Just before anybody comes in on that, I just wanted to pick up something from Rory. Thanks very much, Rory, for putting this question in, which is, does ESG really matter when you're chasing yield, or is it governed by your capital provider seeking ESG-specific investments?
Absolutely. Let me take that one. So number one, let us be clear on one thing. You know, these logistics assets are mainly comprised of concrete. Yeah, that is a matter of fact. And working with concrete, I trust everyone will confirm, just consumes awful lot of energy. So that is stage number one. And that, of course, as a next step, can be somehow balanced by installations, whatnot, in the long run. But when starting constructions, it's a matter of fact, you know, no energy, no concrete. Anyways, but talking about the link between ESG and potential yields. For the time being, the absolute prime yields can only be reached with providing the correct rating of a building. You know, just to, of course, in best case, you have a platinum rating. So that is an absolutely must. Going forward, and that is actually one of the items which has been neglected, is the fact that this particular rating, when it comes to real estate valuation, you know, I've never seen an additional top up when you have a platinum in an external valuation. But what you can see, though, is, of course, that you probably have way more higher chances to let a building if it's properly branded.
Yeah, I would just add that the valuers, the external valuers, they do make really no distinction between if it's a BREEAM outstanding or other green credential on that building, because what you're looking for is that's being translated into the rent that you're getting. But the ESG, it's all about future-proofing your building. So as Raymond was mentioning, as a good owner, you should be taking these steps, although it's not fully appreciated in the valuation community as of yet. And so I know we're having conversations with our valuer, how they're looking at green leases and other concepts to see if in the future valuations we will get some benefit. But right now, there is no clear link between your green credentials and yield. It's all what the market is looking at in terms of